Hi, my name is Mark Walker. I'm the Editorial Director and CEO at the Fintech Times. And today I have with us Vijay Bains, Group Chief Sustainability Officer for Emirates NBD. Pleasure to meet you, Vijay.
Pleasure to meet you, Mark, and all your listeners and watchers as well.
Emirates NBD is continuing to integrate sustainability across all of its operations. I just wondered if we could start off with a little bit of what does sustainable finance sort of mean for you?
Yeah, perfect. So for us, sustainable finance is any finance allocated towards a sustainable project. So by that, it could be renewable energy. So we finance a lot of solar within the region. We finance solar as well globally. Could even mean waste to energy. On the other side as well, I think EVs. So we are also the largest financier of EVs in the region as well. I'm hoping, Mark, and the viewers have EVs as well, financed by Emirates NBD. On the other side as well, green buildings are really important for us. So within the region as well, green buildings are really important because one, they're more energy efficient. So our bills come down. Two, that produces less emissions, but also has less of a stress on the grid as well. So there's quite a few different use approaches as well and areas where we look for sustainable finance. We focus on one level corporate clients, whereby we do also offer discounts to our clients as well for sustainability. So if they hit those KPIs and they align to our net zero trajectory, can give that discount as well. We'll also give sustainable finance advisory because increasingly this is a language that our clients and investors want to see as well. So often we also advise our clients as they IPO as well on sustainable finance and on sustainability readiness as well.
As you're sort of talking there, I was interested to see, obviously, over the last few years, digital transformation has been a really big theme, and obviously, you guys, as one of the traditional banks in the sector, have a lot of partnerships. How do you find that digital transformation and fintech partnerships play out in enhancing sort of sustainability and ESG sort of data accuracy in a way?
I mean, absolutely crucial. I think for us, digitalization is key. If I take a step back as well, the amount of data around sustainability is huge. When we're talking about emissions, we're talking about scopes 1, 2, and 3 emissions. When we're talking about ESG data, it could be 500 different data points. The reporting burden is quite heavy. So actually, we need to automate and digitize as fast as possible. And it's with that digital automation, it's quite hard for us to see the wood from the trees as well. Now, we've also partnered with a number of fintechs as well in order to help us on that automation journey as well. And again, otherwise would be, I mean, it's almost counter sustainability to print stuff out, to have an analysis of it. So actually using those automated tools, we can see where our emissions are increasing, where they're decreasing. For us as well, the other side of it is, as a bank, we're concentrating on our finance emissions. What that means is how we lend to different industries. Are we lending to industries that are decarbonizing? Are we de-risking our books? Again, we use a lot of automated and digital tools for that.
So obviously, we can't get more than 2 minutes into a conversation without bringing up the word AI. And obviously, emerging technologies are kind of one of the key areas that are helping to improve access to things like sustainable finance for SMEs. How do you find that those technologies are playing out in actual practical use?
Yeah, I mean, very, very practical. I think you're right. AI is the buzzword, and I think it will be the buzzword for the next few years as well. So for us, actually, we've already put a use case on our website. We got about 500 or so inquiries a month around sustainable finance, around sustainability. Actually, we've now got an AI chatbot that actually handles all of those inquiries. Now, that isn't just to support the customer, it's also for us to understand what are our customers asking for as well. And often we found it's quite simple data on our reporting, on our missions, on our products. So actually, if someone's asking me late in the evening in UAE time, actually UK clients asking that question, the chatbot's able to handle that and then do a nice handover as well. On the other side as well, using the AI, we now get to see the analysis or the questions that people are asking. So imagine it's one of my favorite restaurants, Marks. I call it restaurant in loose terms, is McDonald's. Now, the McDonald's terminal can see obviously what we order and what we don't order. And the interesting thing, I know McDonald's did some analysis where they said people order very differently from when they do in person. We've also noticed this with the AI chatbot. people ask a lot more wider questions around actually what we do as a bank, how sustainable we are, what's our future plans. On the other side as well for AI, we also have a look at, we are looking at integrating a chatbot to explain sustainable finance and some of those terms I was mentioning earlier. So we have probably about 600 to 800 sustainable finance KPIs. One of the things we're looking at with AI is how to put that in our relationship managers' hands and our customers' hands so they can understand when their financing is coming up, what will apply to them, what kind of discounts we can give, what kind of products we can offer as well, to put that power and speed in their hand. And then finally, with AI, the energy demand is high. So actually, we have built out a new data center. We have integrated the GPUs as well from NVIDIA into our data center. So we encourage all of us, all of the senior leadership, to use AI throughout the bank. We also offset our emissions for that using nuclear and renewable energy as well, so that it is less guilt on the emission side there as well.
I guess it, as you sort of alluded to there, it's kind of all about the personalization of the experience, isn't it? You want your customers, your investors, or anybody that's interacting with you to have the experience that they want from you, rather than you talking to them in one standard language, as it were.
That's exactly it. So we want to be able to tailor exactly the way in which our clients are speaking to us. A lot of them are asking on reporting, a lot of them on our ESG ratings. We really also want to speed that up as well. So sustainability, ESG can seem like a bit of an alphabet soup. And we found using the AI engines, it's simplifying it, explaining it in a human language, what we can all understand. And it's in real time as well.
And I guess thinking sort of a little bit more about ESG, obviously ESG as a term has taken a little bit of a heat recently. And I think, when I'm going to ask this question about ESG investing, it's not necessarily ESG investing that we're talking about, but more using that framework as a key for what investing looks like. How do you think that sort of investment landscape is changing over the coming years, and how did it get to where it is now?
Yeah, so I think with ESG investing, it was a term that was coined about 6 or 7 years ago. Um, ESG investing really underwent a transformation during COVID. So where there weren't a lot of pools of capital, ESG was seen as a safe haven. So some of the, I would say, the change in the market dynamics is as a result of us coming back to normal market economics. There's also obviously political elements as well of ESG and net zero as a whole. For me, ESG investing is sustainable investing. So actually thinking very simple terms whereby we look 10, 20, 30 years from now, for which industries will still be here, what industries are growing, and where do we need to align to as part of our global regulations. So if I take, the biggest example, our energy demand is increasing because of AI. Our energy demand is increasing because of actually global living standards are increasing, and actually populations increasing. So actually, renewable energy is a really safe bet there. As quickly as we see renewable energy being added or any energy, that demand is taken up. So actually, if you align that to net zero, that's a great example of sustainable investing. Also, you can see asset managers from Europe really piling into sustainable investing and actually providing a cheaper pool of liquidity and a more stable pool of liquidity as well. And what I mean by sustainable investing in that return is basically ensuring that you have access to the most capital. During the credit crunch, those of you old enough to remember, 10 or so years ago now, it wasn't just because of capital, but having access to capital. Sustainable financing is probably now 20% of financing in some jurisdictions. So doing a sustainable finance transaction really makes sure you've got access to that ESG investing pool as well. And actually you're more liquid and your credit profile is stronger as well. Finally, sustainability is increasing. I think we've seen in every country and every jurisdiction, regulations increasing despite political changes. Green building standards are getting stronger, renewable energy is getting stronger, those net zero pathways are getting stronger and stronger. We've seen oil demand from the IEA being predicted to have peaked as well in the next 10 or so years and then start to fall off as well. So actually, we are now starting to see a change in the market economics. So for me, ESG investing is more around that future demand and where we need to go.
I think that's kind of an interesting one because, again, I think I have always seen ESG investing as a long term sort of offering. Um, but obviously, there's a lot of short term requirements for people with financial performance, etc., and things else. Do you think ESG investing has any place in that sort of short term market return?
Yeah, it most definitely does. If I take a step back, I'm a climate scientist, environment scientist. So I look at a lot of the climate models. I look at a lot of the commodity prices as well. And look, we always hear about Bitcoin and other crypto coins as well. I actually have a look at the climate change models that are going to happen. And actually, you can predict which commodity is going to peak. So we've seen rising prices for cocoa because of challenges in West Africa because of climate change. We've also seen orange juice futures increase as well last year, as well as coffee futures as well because of climate change shifting some of the precipitation patterns as well, which is now affecting commodity prices around the world and having an inflationary impact. Actually, that's a short-term benefit. And I wrote a paper about a month or so ago that actually, some of these commodities are outpricing gold for some months as well. So actually, there is a lot of short-term benefit and upside there as well in the commodity trading. On the other side of kind of sustainably linked loans, as clients come to update their loans, their banks are now asking them for their transition plans. So actually, it's affecting their short-term liquidity as well, and their revolving credit facilities. On the other side, for your retail bank, I'd recommend talking to obviously Emirates NBD as well as other banks as well on what retail banking products they're on offer as well, because often you'll see promotional offers there.
Yeah, that makes sense. You sort of touched on the idea of loans and everything else. One thing that the UAE has really seen a growing interest in at the moment is sort of green bonds and SUTs, etc. How do you assess their potential in sort of properly mobilizing private capital towards sort of the UAE's overall sustainability goals?
Yeah, I see green bond growth being really, really fast. We've seen real growth in the market in the last 3 years, and also in sustainable sukuks as well. So in the global market, with the capital of sustainable sukuks, it's a great way to get into the market, particularly if you're doing a larger transaction, because you can tap up a diverse range of funding. Also, you can tap up, yeah, discounted funding at certain periods of time as well. And if you've got a specialist product, let's say if you're doing blue financing or you're doing something in AI, there are specialist investment vehicles that will come in and be very interested in that. We've seen real interest in blue finance as well in the last few years, and that will increase as well. So often the pricing is quite advantageous as well. Also, if I take a step back with the green bonds, it helps with that corporate strategy. So a lot of CFOs and a lot of CEOs have asked, what are you doing around your sustainability strategy? The green bond is a great way of doing it because actually you issue a bond, you'll do a roadshow, and then actually what you do is you explain to the investors and clients your pathway for the next 5 years, how you've integrated sustainability and green considerations. So actually you can kind of sort out a lot of and resolve a lot of your corporate strategy questions that a lot of investors and regulators have as well. And then for us, at Emirates NBD, green bonds are a growing part of our portfolio. A lot of our clients are now coming to us for it as well. They're also a lot more easy to access as well. So we support on the structuring there as well.
And I guess they have a sort of a better sort of general understanding in the investment world. It's kind of like it's almost like it says what it does on the tin, isn't it? When it's a green bond, as you say, because it leads into that strategy and connects in very nicely. Do you think that sort of ease of understanding and relatability is the thing that's sort of driving the interest at the moment?
Yeah, I think so. I think green, net zero, I think they're terms which are now being around for about 10 to 15 years. I think we all understand that emissions need to decrease. So that means actually as a corporate strategy understanding, you can say, actually, if I add some more renewable energy in, that will qualify for this. Or if I build a greener building, that will qualify, or have a desalination plant that uses renewable, that will qualify. So I think that will continue. I think at the moment, green bonds account for around 70% of sustainable bond markets as well. We are also now seeing a bit of transition into social bonds as well. so social considerations. But that market will increase as some of the standards there become standardized.
Well, that's interesting because I was going to ask you to get your crystal ball out and give me some idea of what you saw from your perspective as the new financial products or partnerships that will be coming out, which hold the greatest promise, for expanding sustainable finance generally.
Yeah, no, great. I'm really delighted to look at the crystal ball, or the sustainable crystal
No
ball, as it
market
were.
predictions. No
Yeah,
market
yeah,
predictions. We're not
no
giving
market
financial
predictions.
advice here.
But I think for me, green bonds would continue to grow. Blue bonds generally, I think, will grow. We're seeing a lot of market interest in the UAE. We've got the conference for ocean and water in December of next year as well. Um, I think in our region as well, freshwater access is absolutely crucial. So for me, that's a really critical one for a lot of customers to integrate. And again, it's a really topical issue. There's a term called orange bonds, it's around gender, which we're going to see increase as well. And that's really around having greater gender diversity at senior leadership and management as well. But for me, I would say what's called transition is key. So what transition is kind of not deep dark greens from renewable energy, but how do you transition conventional industries? So if we look at oil and gas industry, methane abatement's really important to reduce emissions. That actually can become a transition bond product. How to transition some of those hard to abate sectors like steel, like aviation, those become transition finance. And actually, we don't all drive EVs, but actually a lot of us will drive, let's say, hybrid vehicles. If you do that on a corporate lens, that's probably 90% of the market. So the next 5 to 10 years, the big theme is going to be transition for our heaviest industries as well. Because I think everyone understands green, as you mentioned, everyone understands renewable energy, but actually transitioning those hard to abate sectors is absolutely key.
I think there's a lot of, well, I wouldn't say misconception, but people are a little bit naive if they think that you can go from 100% emissions to zero
Yeah,
in such a small amount of time. There has to be a transition in any major shift or any major change. So I think that's kind of a really interesting one. And you think that, as you say, you can actually produce a bond around that, which actually then is helping not only the transition but also helping the company as well align its strategy, I guess, in a similar way as the green bonds do.
exactly that. And what we've seen in the last few weeks is the International Capital Markets Association, the LMA, produced transition finance principles. So and that will kind of start to decarbonize most of the economy then. And I think for me, there's going to be less finger pointing and more saying we need to get in this together and see what we can decarbonize and what we can't. I think the final one is probably the carbon market, so carbon trading as well. So we, amongst others, have carbon trading desks. Integrating that into your financing is absolutely key as well. And we also buy offsets for our own emissions that we simply can't reduce to zero. And we will reach a point where actually, a lot of our clients, a lot of us will say we can't reach net zero without credible offsets as well. So I think that debate on carbon trading is going to come back as well.
I guess that carbon trading kind of almost links into those transitional and transformational bonds as well, because understanding that, you need more time to reduce emissions properly and effectively therefore needing to use the carbon credit system to be able to give you that extra time to then focus on really making an impact.
Yeah, exactly right. And I think having credible carbon offsets, which are kind of science based and approved, is the only way for us to kind of offset some hard to abate sectors. And actually, some of the standards have really increased. So from COP last year in Baku, we've really seen the standards and transparency really improve. Yeah, and I think some of the other areas that people are looking at is water offsets, nature offsets as well. Some really interesting products. I think carbon makes the most sense because actually, if I emit in one area, I should be able to offset globally because it's becoming global emissions as well. So I think finally, I think you're right. The industry has had a few wobbles around verification, around a few standards. But actually, if I have a look at it, Mark, I've been in sustainability for around 20 years. It's really welcome scrutiny. If you said you were in sustainability 20 or so years ago, you weren't very popular at parties. Not to say I'm popular now, but there's a lot more understanding of sustainability, and I think with that comes more criticism and feedback as well.
Thank you very much, Vijay, for that insightful conversation. Really interesting to hear some of those main points. Thank you so much for taking the time to speak with me here at the Fintech Times.